In today's video, we are going to take a deep dive into the volume-weighted moving average and quickly compare it to the simple moving average strategy that I used in the past videos, in the first videos of this channel in fact. So the strategy is very simple. We have a volume-weighted moving average in blue on the chart, on the BTC USDT chart in the daily time frame, as you can see. So I've added also the simple moving average, but let's remove it for now. And this strategy is always the same. So we enter a long when the daily close, the daily candlestick closes above the blue line, for example here at about $61,000, and we would have probably closed the trade here when this small red candlestick closes below the blue line at about $60,200 here. So the trade would have lasted about 22 days here, and that's why for these strategies that I test on the moving average types technical indicators. So we did the SMA, the EMA, the Kaufman Adaptive Moving Average, and today this is the volume-weighted moving average. I recommend to use the spot market because the long trade that we take are usually quite long in duration. They usually last a few days, a few weeks even, and sometimes longer. So as you can see on the chart, compared to the SMA in yellow, the volume-weighted moving average in blue reacts faster when the volume gets bigger and bigger. For example, with this green candlestick that you can see here on November 2024 for Bitcoin, the volume, which you can see at the bottom of the chart, maybe you are familiar with TradingView, so you have the volumes, so this is the Binance volume, and maybe it varies across exchanges, of course, so maybe we would have a slightly different volume-weighted moving average for other exchanges, but today we study the Binance one. And when the volume gets bigger and bigger, we have a spike in volume here. This blue line slope becomes bigger and bigger, so it climbs to the upside quite faster than the yellow simple moving average, as you can see. So of course these indicators usually lag a little bit depending on how the calculations are made, but yes, overall what we have to remember about this volume-weighted moving average is that when there is a spike in volume, when the volume gets bigger, the blue line reacts quite fast, quite quickly just after that spike. So that's what we are going to explore in our long-only strategy today. I've explained to you the rules, and let's look at the results now in daily, 4-hourly and 2-hourly. So here is a quick backtest in the daily time frame where you can see the VWMA on top of the chart in the blue line. So there are very few trades in the daily time frame. That's why I don't like it very much, and we are going to study the 4-hourly and the 2-hourly as well. But the equity curve is very good, so I believe the number of trades is about 22. You can count the number of green dots here on the top chart. In the blue line, the middle chart is in fact the capital, the equity curve. So it starts at $1,000 and it ends here at about $42,000 after about a 7-year-long backtest period. So the backtest starts here in 2017 or so. I say also because it depends on the length of the moving average. The longer the length, the later it starts, in fact, because the moving average for its calculation needs a lot of candlestick to have a first value. So when the length is big, for example 200, I think here it's for 130 in the daily time frame here for the volume-weighted moving average. When the length is bigger and bigger, the backtest starts in fact in about 2018 rather than 2017. So now let's take a look at a 4-hourly backtest. So here the same strategy tested on the 4-hourly time frame. So the number of trades, as you can see on the top chart represented by the green dots, is a lot more than for the daily time frame. And also the equity curve is exceptional because we have a Sharpe ratio, I believe, of 1.6, so it's a big Sharpe ratio. If you don't know what is a Sharpe ratio, it's basically a measure, a performance metric of the return over risk. So when it's above 1, usually it's considered good, and the higher the better. And here the final performance is about a 54x. So this is an incredible performance that we have here with a number of trades that is acceptable because it's over 100. This is usually one of my criteria to filter out the strategies that don't match this number of trades, this number of occurrences that I'm looking for. I'm looking for strategies with a certain number of trades, usually over 100, to have some conviction, some statistical conviction into the strategy that it will work in the future. Of course, it's not guaranteed, but that's what I'm looking for. Not too few trades for our strategies. So this is the backtest that I like here. Very good performance Sharpe ratio. And the drawdowns, of course, there are some drawdowns here in late 2024 and at the beginning of 2025. And let's compare it directly to the use of a simple moving average instead here of the volume weighted moving average. As you can see here, still in 4 hours, we are using the simple moving average. The performance is not a 54x but a 41x, and the Sharpe ratio is a little bit less than when we use the volume weighted moving average. I believe it's 1.3 or so instead of 1.6 for the volume weighted moving average version. So this is still quite good, but by using a volume weighted moving average version of this long only strategy, remember we also compound 100% of our investment in each and every trade, you might be capturing some more nuance in the price action. And why? Because the volume weighted moving average, as its name indicates, it uses the volume, so it can react to the volume, whereas the simple moving average does not. And that's what I'm looking for when I'm testing a lot of technical indicators like that. I'm looking at the nuances each and every one of them tries to capture within the price action. So let's take a quick look at the heat maps. Here in the daily time frame, I usually use green for the daily time frame in the heat maps. So the best length would be around 130 or so. We have a smaller length, a smaller greener area, which could be good here with a length of about 40. So this is something that we could test also. Remember, the first column is the return multiplier, so it's the overall return of the performance over the backtest. And the right column is the Sharpe ratio. So let's remember this length of about 130, and let's go to the 4-hour time frame. I don't like the daily time frame too much. Why? Because the number of trades usually is not very big. There are too few trades, and I want more trades than that. So the 4-hourly, as you can see, the obvious bluer area where the performance is incredible, in fact it's about a 50 or 40x here, is around the length of 220 to about 300 for the volume weighted moving average, and the Sharpe ratios are exceptional, usually above 1.5. So this is the best performance area here, and the number of trades is usually above 100. So I like this strategy here very much, and it can be paired with other moving average types strategies. For the same strategies rules, we enter long when the candlesticks close above the line and we exit when it closes below the line. So the strategy is always the same, usually in the videos that I backtest these days. So instead of allocating 100% into the SMA version, you can divide your allocation between the SMA version, the EMA version, the Kaufman Adaptive Moving Average version, and this one, Volume Weighted Moving Average version as well. And finally, let's take a quick look at the 2-hour time frame version. So as you can see, the area that is the rosiest one is not well defined here. It's very large, between 200 and 365 for the moving average length here, so the volume weighted moving average. The Sharpe ratio are not so bad. Sometimes, for example, yesterday for the Kaufman adaptive moving average in 2-hourly still, we couldn't exploit the strategy in 2 hours because the Sharpe ratios were not very good. They were below 1, and here they are above 1. So that's quite good, and the performance is lesser than with the daily and the 4-hourly, but it's still quite good. So I really believe that this strategy can be used in 2-hourly as well. So let's conclude the video with the 4-hourly backtest with an incredible performance of above a 50x over the 7-year long or so backtest for Bitcoin USDT on the Binance exchange. It is an incredible performance, as well as the Sharpe ratio, which is 1.6, which is a very good Sharpe ratio across all the strategies that I have backtested until now. So please hit the like button if you like the video, and also subscribe to the channel if you want to see more backtests from me in the future videos. Bye bye.